Hey, what's up, everyone? Welcome to Tuck Notes Beginner Stock Talk. My name's Tuck, and today we'll be talking about Tesla and the overall stock market. We'll be covering what to expect moving forward next week and some key price levels to be on the lookout for. And we will watch a short video on more description about inflation and how they're managing it for the current moment. So with that, I said Tesla on Friday closed at $759 and something cents. It was up, it's like up to 16% almost, I think. From the week, it was up $100, which is significant. So Kathy Woods jumped in at the perfect time, bought it at $620, bought some shares, and then she bought some more shares a few days later, totaling to an amount of 100 million shares worth of Tesla. And so that's a sign to me that if Kathy's buying, might be a good time to buy too. So, but not all of it at one time. Last time we talked about 750 being a key price level. We now passed that. We're at 760. We got Kathy Woods buying Tesla stock. The S&P 500 was, when we talked about it in recent videos, it was in the 380, 390, went to 380, and now it went all the way up to $415. So that's like substantially big for the overall stock market. Now we've broken back from lows from Tesla from 620. It had a good run up this week. And check this out. We could have a bounce back of 50% gain, maybe up to $1,200 of Tesla in the short term. So what I'm basically saying is we're in this Elden Ring situation right now. I don't know much about Elden Ring. Elon does. If you want to know, find out more about it through him. But we're in the Elden Ring. You can look that up. I had to look it up, but it's not too complicated. And so I don't know how this works when we go down and the percentage, how it is, but I know it's kind of reverse and backwards. So basically, what is Tucker saying right now? Is saying that like Kathy Woods, she bought at 620 and she's a long time holder. She'll probably hold this up until Tesla gets to $1,200 and possibly sell or hold or buy more. I don't know. But she's a smart woman and I do follow what she has to say. But for right now, we might have a pullback. Tesla's at 700, let's say it's at $760. We might have a pullback of maybe $732, maybe somewhere. It's a little over inflated, so it could get a pullback. And I'm just giving out numbers right now. 750 you could definitely be comfortable with. 740 you might be comfortable with. We might even have a pullback that just goes down really low. But what happens with the pullbacks is you hold on to it and then it springs forward. So Amazon split is happening on June 2nd. And they were $2,000. Right now they're $2,300. Not much of a gain compared to Tesla. Next week is an action-packed week, but before that, I'm going to show you a video about inflation and our current situation.
Just care about whether or not inflationary pressures are going to abate. And when you look at it again on a year-over-year basis on a headline number, it was indeed a slower pace of price increases in the month of April than in the month of March, and that's because it clocked in at 6.3%. Again, the street was actually estimating about 6.2%, so essentially in line, but again, a little bit of a slowdown from the 6.6% pace that we had seen in March. But look, that's still a positive number. It's still a relatively large number above where the Fed would like to see it at 2%. But I'm also looking at a number of other things inside the report because, again, we want to see signs of whether or not other types of price pressures are slowing. And one thing that I was watching was, in addition to just a headline number, you look at spending and also income, personal spending clocking in on a month-over-month basis at 0.9% between March and April, and personal income at 0.4% on a month-over-month basis. But also take a look at the personal saving rate. Very interesting kind of bit of this report. It showed 4.4% in terms of saving as a percentage of disposable personal income in the month of April. By the way, that is the lowest rate of saving that we have seen since 2008. Now, on the surface, just because it's a low rate number doesn't necessarily mean people are saving less, because a lot of stimulus happened, right? So you can save a smaller percentage, but if you also had more income coming in, your total savings is going to be higher. But at the same time, you wonder if there's a psychological effect of people looking at how much they're saving, which is a lot smaller now than it was about a year ago, and saying, well, is this the time for me to perhaps stop consuming, stop spending so much?
So just one quick precision here. When we're talking about the savings rate for April, that was the percentage of income saved in that month, correct?
Correct.
So in other words, it also doesn't account for all of the money that people could have saved and not spent yet, right?
Exactly.
Okay.
But again, I think the point here is, I mean, it's a very salient point that the level of saving, which is different than the rate itself, is still extremely elevated. But you wonder if there's a psychological effect of people noticing, well, actually, my paycheck, which in many cases the wage gains are now not outpacing the amount of inflation that they're experiencing at the stores. They're now saying, well, you know, maybe it's time for me to start cutting back, which will have at some point the effect of what the Fed's trying to do, which is try to tamp down that demand that's been driving a lot of price increases by America's producers.
Yeah, and there's the so-called wealth effect too, right? Where people are seeing their portfolios go down, and that's also affecting spending patterns. Now, PCE does not have the breakdown by stuff, right? In terms of
not like CPI,
not like
the other
CPI. And we were talking in the break and about the implications for the Federal Reserve, and you said, even if it did have that breakdown, the Fed's really focused on this core big number. They're not as much focused on the individual components.
Yeah, well, what's interesting is that we normally hear the Fed as a talking point make a distinction between headline PCE, which is their preferred measure of inflation, and then core PCE. Again, core strips out the volatile food and energy prices, so it clocked in at 4.9% on a year-over-year basis in the month of April. But you haven't heard the Fed make that distinction as of the last year or so, right? They're not saying, oh, well, if you read the core readings, it's actually lower than that. I mean, overall, the headline number and the real experience lived, kind of observations that Americans are making at the store, they're not making that distinction. It's eggs are going up by 10%. Right. So Jay Powell said literally a few weeks ago, well, look, everybody reads the inflation reports. We all know that. But he said, quote, truthfully, this is not a time for tremendously nuanced readings of inflation. That is a way to neutralize any sort of nuanced or very, very kind of myopic readings of these inflation reports. Either way you cut it or slice it, this April reading likely doesn't change
the fact that the inflation is still going to happen. So again, if you like this video, go ahead and push the like button if you found it informative. And you like these videos, feel free to subscribe to the channel. It really helps out the channel. I hope you found this video helpful. And at the last thing I have to say is that I see a tweet, because I follow Elon, as you know, and I post things on my Instagram of his codes at TuckerMLO. There's going to be a big sunrise tomorrow morning, is what he says. And this momentum that's going on, I think we can expect this momentum to push up more, and I could see possibly Tesla going up to $905, and that's it. Then possibly going back down. I don't know though, it could go up, but that's just Tuck's evaluation. I love you guys so much, and thank you for watching this video. Have a great day. Bye.